Along with my day job running an investment business, I started Tinsley Park Talks, a global networking and leadership platform where I interview industry legends from finance to tech and great thinkers to notable celebrities. In these interviews, we discuss great ideas around investing, entrepreneurship, problem solving, and all other lessons of life. Welcome to another episode of Tinsley Park Talks.
Take a moment to please subscribe to the channel and like this video. We really appreciate your participation.
This program is in partnership with Nesh. For more information, please click on the link below. The last 2 decades have witnessed 2 significant shifts in the energy landscape: the shale revolution and the increasing adoption of renewable energy sources. These 2 shifts had profound impact on the American workforce, investment portfolios, and geopolitics. Our guest today is Osmar Abib, who gives us an inside look into his life as an international investment banker, who worked on some of the most renowned energy deals in our recent history. He shares his views on shale, ESG, energy policy, renewables, and why all energy matters. He also leaves with us some fun stories from his deal-making days. Let's hear from the Houston banker who covered the world. Osmar, welcome to the show.
Glad to be here.
Yeah, it's a pleasure to have a luminary like yourself join me today. It's not common to have someone like you that has had a very rich experience in your particular field that we're going to talk about, which is energy. I'm really excited to learn more about you and share your journey with our audience as we unpack what happened in the last 30 years and the various peaks and troughs of energy revolution that we've had. So, this topic is called Energy Revolution Then and Now. You're one of those bankers that have traveled all over the world. You worked at some marquee investment banks in the world that had allowed you to see head on all the key moments that the onlookers have just read in the newspapers and watched on TV. So one other quick mention is that we have a common friend, Steve Trauber, who had recently retired from Citigroup. He was one of my guests. We talked about energy addition, and I think we're going to have some overlap there. You guys are obviously friends, so I'm glad. I think Steve's going to be really happy to see you join me here as well.
Yeah, no, we've known each other all the way back to our days at Rice University.
That's right. And I can't wait to talk about your background, because you obviously have a very, very interesting background. And another funny thing, when I first, met you and we were talking, I said, hey, your name kind of sounds like my name, Najib, last name Abib. Like, where are you from? You don't look like me. You're look a lot more Caucasian than I do. I mean, you look Caucasian. So can you take us back to your roots? Like, where were you born? What's your roots?
Yeah, sure. Again, thank you for having me on your podcast. And I've enjoyed listening to your prior ones, including the one you had with Steve. I do have a pretty interesting background. I'm actually Brazilian by birth, and I immigrated to the U.S. with my parents in first grade. So my native tongue is Portuguese, and today I'm still a dual citizen of the United States and Brazil. And so I had to learn English pretty quick when my parents dropped me into first grade in Houston, Texas. And then shortly after that, my dad, who had an energy background as well, told us we're moving to Saudi Arabia. Yeah, and so he was with one of the big U.S. companies, and he was seconded to Aramco. And I spent 6 years of my childhood in Saudi Arabia from 3rd grade to 9th grade. I'm actually a graduate of the Aramco school system in Dhahran, which is the headquarters. And I'll get into that later. But it was a very, very interesting and different background. And we got to know the world for sure.
That's a great background. So I guess the reason.
And on the name, I'm sorry, you asked about the name.
On the name.
So Brazil is my home country, but my dad's side was from Lebanon, and my mother's side was from Switzerland.
From Switzerland.
So I have a Brazilian, Lebanese, Swiss mix, and that probably explains the looks as well.
That's fascinating. Love that. So you came back to Houston after living in Saudi Arabia for a while, right? So you finished from Houston, and then you ended up doing your undergrad at Rice.
Yeah. So just a quick side note: I ended up moving back because the school system there does not have high school, and I ended up going to Memorial High School in Houston, Texas, and it's a very high quality public high school. And the reason I mention it is that there's also a connection with a bunch of very senior bankers and principals in the energy world that were all in my class, and we actually played on a basketball team together, which was, I'm talking about a really small world. But I finished at Memorial, then went to Rice University, and I got a chemical engineering degree there. And I was actually a practicing engineer, and so I spent 4 years with Arco Oil and Gas, which is now part of BP. And in 4 years, I got a tremendous experience, starting in the gas fields of Oklahoma. And then I went to Prudhoe Bay, Alaska, which is about as far north as you can get. And probably the most fascinating year of my career because of just the uniqueness of the place. And then I spent several years in the Gulf of Mexico. And I did a lot of different things, but I really liked being in the field and was truly enjoying that. And then I was thinking about business school and got into Harvard Business School, and so off I went. And my timing was pretty good because the energy business is not doing quite well. It does have cycles, a tremendous amount of volatility. And I didn't go to be in investment banking. I thought I was going to come back to the energy world, but when I was graduating, the energy world was still not doing particularly well, and Wall Street was booming. So I started Wall Street at Lehman Brothers in 1987, and was feeling pretty good about Wall Street, although it was still new to me. And I moved in to cover energy companies. And I'd been on the field there for about 45, 60 days when we had the big crash in the fall of 1987. So I said, great, I moved from one business that has a lot of volatility to another. And I thought originally the plan was to just check it out and go back directly into the oil and gas business. And 34 years later, having worked at 2 global banks, I was still doing it and thoroughly enjoyed being a banker, providing quality solutions for my clients and building a great team at the 2 places that I worked.
That's awesome. And is that true that at HBS you graduated the same class with Carla Harris, which was also one of my former guests?
Yeah, there's a lot of close connections or close coincidences between who you've had before and myself. That's correct.
Small world.
I can't sing as well as she can.
She is a great singer, yeah. So you spent time. How many years were you at Lehman, and what did you do after the crash?
Yeah, so I survived the crash. I remained in the energy group at Lehman, and I worked there from 1987 to 1995. And then I moved to Credit Suisse. And the reason I moved was there was a rebuild going on, and it was a bigger firm, much more global, being based in Switzerland. And and it was really just kind of the opportunity. And there were some really very quality people that I wanted to work with and build a team around. And I was at Credit Suisse from 1995 to 2021. So yeah, 26 years.
Very, very long career there. When I was in college and I was in New York, I actually had an internship at Credit Suisse in the Madison office.
Yeah, 11 Madison.
Did I say I had an internship? Sorry, I misspoke. I meant an interview. I was interviewing for an internship at Credit Suisse, but I ended up taking an internship at Merrill. But I remember still walking into the beautiful building in Madison. Is that where you were? Is that where they?
Yes. Well, okay. I in my whole career, I went back and forth between New York and Houston.
Right.
But yeah, 11 Madison was built almost 100 years ago. And it, I believe at the time, maybe still today, had the largest footprint of any building in New York City. It was an entire city block. And so for banks that have big trading floors, it was a really particularly good fit. But I moved from New York to Houston, and it was kind of a pretty well timed move. I moved because I want to be close to my clients, and I want to have a little more better work-life balance during being, hopefully spend more time at home with my family instead of being on the road a lot. And what turned out was with the energy business, it was going to become very global, but we had a renaissance in the U.S., and it actually made Houston continue to be the center of the world, in my opinion, for the energy business.
When you say a renaissance, so here's the beginning of, let's say, the first energy revolution that we're going to talk about today. And you've been with Credit Suisse, one of the largest bulge brackets out there that have been part of most of the major transactions at the very, very top in the energy world. What we would love to hear are some of your experiences from the shale era, which was mid 2000s, early 2000s onward, and some of the deals, if you'd like to share, that you worked on, which we might have heard of and watched in the news.
Well, sure. So what I wanted to mention is what I liked about my time at Credit Suisse was that we worked at a very large bank, but clearly not the largest, and I'm certainly not based in the U.S. But I thought we punched way above our weight. We had very good people, very entrepreneurial, very quick to move, to foresee how the world has changed. Kind of the famous Wayne Gretzky quote of, skate where the puck is going, not where it is. And I thought we were really good at that. And one of the reasons I worked there as long as I did was I had world-class partners that I really enjoyed winning with. And really it was all about the clients, coming up with solutions that would fit what they needed. And the other thing I'm particularly proud of, and I would argue we changed the world, because Credit Suisse, with myself and a relatively small group of partners, we financed the Shale Boom. And what I mean by that, obviously other banks were involved, but we led about 50% of the offerings that were done over a couple-year time period, right when they had figured out how to get shale to actually produce efficiently and economically. And there was a huge need for capital, and our team was very, very quick to finding solutions. And the facts are there that if you look at all the deals we've done, we led about 50%, which is a huge market share compared to most situations over my 30 plus years on Wall Street. And that was important, not only because we did great, but it was important for our clients because they needed that capital to really develop, to really make the shale boom work. And the thing I'm particularly proud about, and why I said it changed the world, it moved the U.S. from being very dependent on foreign oil. We were at the time importing 50% of oil into the U.S. to largely becoming self-sufficient. And that was important for a variety of reasons. One, obviously, we're not reliant on foreign sources. It was very innovative and very opportunistic. And also, it created a tremendous amount of jobs and ultimately taxes to benefit the citizens of the United States. So I think it was like another form of the Industrial Revolution, and I was particularly proud to be part of that.
Did you know that your company's most valuable assets are the knowledge stored in your experts' minds and the content they've created over the years? These assets form the foundation of successful teams. When experts go on vacation, move teams, go on parental leave, retire, or resign, your teams find themselves in the dark, resulting in onboarding delays, quality loss, burnout, and drop in customer satisfaction. Nesh revolutionizes this for you. Nesh turns subject matter expertise into subject matter avatars to preserve this knowledge. Nesh connects all of your company's content, turning treasure troves of data and knowledge from your experts' minds into precise, searchable answers. Nesh is made for simplicity, where you can ask a question in natural language. It's just like interacting with a colleague. She improves continuously to become the ultimate subject matter expert for your organization. With Nesh, use your knowledge as a superpower to bring innovative products to market, grow business blazingly fast, and provide an extraordinary experience to customers. Unleash the power of your enterprise's most valuable asset with 24/7 available subject matter avatars. Absolutely. And I think post 2008, the shale industry was probably responsible for the majority of the jobs that were created for 3-4 years. A lot of
Correct.
New Yorkers, including myself, had moved back to Houston for opportunities. Texas was booming, and other areas.
And it wasn't only that. It wasn't just the energy industry, but it was all the industries that basically use the materials or the feedstock. So, for example, it recreated the U.S. petrochemical industry, which largely had disappeared because it was too expensive. The feedstock was too expensive. But when we found all those hydrocarbons, additional hydrocarbons at a very affordable cost, all of a sudden significant plants were being rebuilt and so on. The other thing is the U.S. has a tremendous infrastructure, and which is still there today and still being expanded. And that happened to be, the shale boom happened to be in areas that were actually relatively mature energy provinces. So there was already infrastructure there to transport the product or transport the hydrocarbon. And that's a huge advantage because a lot of significant sources of hydrocarbons around the world where they can't move it because there's no infrastructure. And so it was innovation, existing infrastructure and technology and entrepreneurship, and not to be ignored, the rule of law. Those things are what made this all work. And it was that, and we'll get into it in a minute. The sort of some of the stuff I ended doing overseas is what made the job really a lot of fun.
Absolutely. Yes, I remember the transition to natural gas as feedstock and just a boom in the sort of Louisiana, Texas, Gulf Coast corridor. Actually, it was relevant to what I was doing at my last job at a private equity firm. And our thesis was to invest in downstream asset services, which were booming. All the naphtha-based assets in the other side of the Atlantic were all of a sudden moving here. It's very exciting times. Was curious if you could share some of those international experiences you've had while you're working on most of these deals. Would you like to share a few?
Sure. Well, you mentioned at the beginning that one of the themes for this discussion was a Houston banker who covered the world. Well, I had 5 partners that were basically living in Midland, and we came to the conclusion that we didn't need 6 because there's a whole big world out there. And so partly because of my background and my willingness to travel and just strong relationships with all my partners around the world, I became the guy to do that. And so I moved from head of America's energy at Credit Suisse to global head. And I started traveling to lots of different big energy centers because it's not all the US, certainly not all Houston. And so I worked on a big Russian deal. And what I found interesting about it, particularly given what's going on today, was it was a big investment by an American energy company into a Russian energy company, and which today would be probably not happening, probably be viewed as very risky. And I remember talking to the CEO, and I said, "How do you feel comfortable? You've gone through all the economics and so on, but all the rules and laws and so on, but still, it's Russia." And he said, "Putin told me it would be okay." So I said, I felt good about that. Now, it was a big company and it was a large investment, but relative to the size of the company, it was okay. But I just like the comment that Putin told me it was okay. So that was sort of my Russia deal that worth mentioning. I worked on the sale of some U.S. and Canadian assets where there was a lot of international interest, particularly for a long time the Chinese were big buyers, and we're starting to hear from the Indian energy companies and Korean and Japanese as well. And the one tidbit I wanted to mention about that was kind of interesting is we want to make sure we had the most robust auction as possible. And so to make sure that things were being treated confidentially and make sure that we weren't being snooped on or whatever, we started putting out emails that were fictitious to some degree, in the sense that we didn't want, if anybody was eavesdropping, they really didn't know what's going on. And so we kept just reassuring through all these emails what a huge demand there was for this particular company. And so whether we were being snooped on or not, we got a huge result. In fact, we were told that in certain countries, they didn't want to see us again because they were so mad that they paid such a big price. All I know is our client was happy. Another story maybe worth mentioning.
Sorry, Osmar. This was a North American or a South American?
It was North American.
This
North American sell side. They were divestiture.
Got it.
Moving to South America that you mentioned, I mentioned I'm Brazilian by birth and heritage and nationality. I worked on a deal which just shows that when the stars and the moon line up, you can do wonderful things. And there was a gentleman who came up with the idea, literally on a cocktail napkin on a flight from Paris to Rio de Janeiro, that the world needed, or investors wanted, a pure offshore Brazilian exploration company. And through a variety of different factors and things that he put together, including hiring some very top-notch Brazilian experts, this gentleman by the name of Ike Batista put together a company called OGX, and he took it public. And we raised $4 billion for a company that had no proved reserves at the time, and we had over $40 billion of orders. Now, it helps that oil and gas at the time was close to $150 a barrel. The thesis was a good one, that the investors did want not to invest only in a national oil company, but wanted something that was more pure play and more opportunistic. So Ike became one of the biggest billionaires in the world for a while. And it was just a very interesting deal to put together, and to see how investors were so enthusiastic. I thought another deal worth mentioning, because it's such high profile and fairly recently, was the IPO of Saudi Aramco. And I and basically the leaders of all the major energy groups on Wall Street were involved in that. And Saudi Aramco is a wonderful company. It is the biggest oil company, or argue energy company, in the world. And again, it was interesting because I'd lived in my childhood 6 years in the country, and which, by the way, they really liked. And I got lots of open arms because of that background. But great company, and it's rare for a national oil company to go public. And they decided to do it, and ultimately turned out to be a successful outcome. And the company continues to do very, very well. Interesting headline that might worth mentioning is that BlackRock just put the CEO of Aramco on their board, and we can probably talk about that topic a little bit later.
Yeah. Interesting. Thank you so much for sharing all those different deals. I do remember Ike Batista. Well, was he like the top 5 richest people in the world at one point? Was he like the richest at one point? It was crazy.
Well, I think he was the richest in Brazil, but he was probably top 20.
Top 20. Okay.
But the thing that was really unusual is how quickly he got there.
Osmar, so fast forward, we're here post-COVID era now, and energy prices seem to have normalized a little bit since the dire times we've seen in the last few years. What are investors focusing on right now?
Well, it's probably worth going back a little bit in history to address the question. Investors are primarily focused on returns in the energy sector. And when we talked earlier about the shale boom and all that, at that point, there was a huge impetus on growth. And people saw that shale could really be produced economically and effectively and efficiently. There was a tremendous amount of capital that I mentioned we and other banks had raised. Unfortunately, they found too much, in the sense that they cooked the golden goose, in the sense that the costs associated with that, both the capital and of operations, and just having a lot of hydrocarbons at one point in time, really hurt returns. And investors started focusing a lot more on that. So that was kind of a multi-year growth phase which, in my opinion, as I said, changed the world. And I think it was hugely important to the United States. But there was a consequence, which was returns came down. And so as we're coming out of COVID, there's been much more focus by investors to companies, and companies certainly are paying attention and responding to it, to focus not only on growth, reasonable growth, but really making sure returns are there. And as a result, although hydrocarbon production in the U.S. still continues to increase and is at record levels, or close to record levels, the companies are being much more careful about how they use the capital. The broad statement I want to make, and I've been quoted on this throughout my career, is that the world's not short of capital. There's plenty of capital, plenty of forms of capital. We need more good people, and we need more good ideas. And so as we're now focusing on a period where returns really matter, people want their capital to be used very, very efficiently. And if they can't, give it back. And so that's why we've seen a lot of dividends and buybacks and so on. And that's not unique to the energy industry. I think it's the market overall. And investors are quite willing to state what they're looking for. And then we also have this group out there called shareholder activists. And I would argue every shareholder or every investor is an activist, but there are activist funds who are also making sure that people are paying attention. And we could talk about that. But that also kind of, the other thing that's going on, and I don't know if you want to lead with a question, but we probably should also comment on how the ESG factor is impacting all this.
Yeah, please carry on your thought process.
Okay. All right. Well, so one of the things that I think most people acknowledge today is that the energy transition is actually happening. We can have a long debate about the magnitude and timing of it, but it's certainly happening. So the most obvious things are the number of electric vehicles we're seeing out there today, but there's many, many other energy transition elements, and so part of the big debate is what's the future for the hydrocarbon industry, and how long is it going to be there? How relevant is it? How impactful is it on? So as we're having the ESG environmental debate as energy transition is happening, the obvious question is what's the future for the hydrocarbon industry, and what's the impact on the environment, and how does that impact this whole debate? And I think people are starting to come to a more reasonable middle ground, which is the hydrocarbon world will continue to be relevant. It's actually going to be extremely relevant. And we can't transition tomorrow. It's going to take a long time. And depending on which particular energy resource or technology that we're looking at, it could be years, it could be decades, it could be lifetimes. And I think what we need is a coherent system, including, we don't really have a national energy policy per se in the United States. Right. We don't have things like a carbon tax. I thought the IRA bill or legislation was certainly an interesting start.
IRA, for those that may not know what it is, it's Inflation Reduction. Go ahead.
Yeah, Inflation Reduction Act. There's certainly a lot of funding, and I think it's being carefully managed, which is good. And so I think these all are kind of pointing in the right direction. There's a bit of also of an anti-ESG backlash or going on. Has it gone too far? So there's a lot of moving parts here, but I think bottom line, hydrocarbons will remain important. Energy transition is happening, will continue to happen. And if we focus on a system of incentives and not punishment, we'll probably get a better result. The other thing is, this is global. So the US can't do it. We can't change everything in the US and hope the rest of the world follows along. And so there has to be some coordination. And then there's also third world countries have different agendas than we do, and their views matter. And then there's a big topic in terms of energy poverty. How can we hold ourselves to certain standards and expect people who are just getting into the industrial age and getting power to their homes and all that the first time to be held to the same standards? So these all have to be negotiated, and we need to have an accommodation for all interests. And then the final thing, which is certainly relevant, very relevant, was as witnessed by the Russia-Ukraine issues. Energy security really matters. And I think the Europeans are certainly figuring that out, given their over-reliance on Russian gas. And there could be other hotspots out there. So this is a very global geopolitical set of issues. And then on the energy transition, one other thing worth mentioning is that a lot of the minerals that are used for batteries and so on are coming from other parts of the world, and our friends and adversaries in China have control over a lot of that. So if we,
Right.
I'm sure that as people think about this, we move into an energy transition quickly and with a set of economics that don't work well, and we have an over-reliance on feedstock and rare minerals that are controlled by China. So I think it's a very exciting time to be in the energy business, whether you're directly in it or you're a service provider as a bank or others. And it's part of the reason I retired was that or pivoted, whichever word you want to use, but I wanted to have a more entrepreneurial set of things that I would be focusing on. And in 34 years at two investment banks, it's probably more than one lifetime for most people.
It takes a special kind of person that had some serious stamina there. Congratulations on your retirement.
Thank you.
So what's your view of sort of this train we're on right now in the next 10 years? How do you see the IRA, the effects of the IRA, the Inflation Reduction Act, and everything that's happening with energy policy and Russia, Ukraine in the next, say, 5 to 10 years? How does the world look then?
Well, I think the world needs to get to know each other better in the sense of being less adversarial. The environmental issue, as I mentioned, is a global issue. So unless we have some consensus on how to manage that, having everybody do it individually is probably not going to be a good result. I think there needs to be, as I mentioned, more incentives versus punishment. I think the world globally, all the key parties around in this debate globally need to acknowledge that the hydrocarbon industry is going to remain relevant and let's figure out how to do it in the best possible way. There are certain things like methane containment and other things that can be done to make it cleaner. There's no doubt about that. Let's not forget about the jobs impact of that industry, not only directly, but indirectly, that we talked about earlier. And I think we need to have, some relatively consistent measurements and incentives and rules of law that people can rely on. Because one thing I've always found fascinating about this industry, energy broadly speaking, is, and this applies to mining and other resource industries, is that you have the underlying commodity that can be very volatile, and you're making very long-term capital decisions and that's just a tough connection between the two. And so to encourage capital to be deployed in an appropriate way, we need to have some trust, we need to have some agreement, we need to have rule of law, and so people feel comfortable making those investments. And I think there's certainly progress. There's obviously a lot of politics involved, not only in the US, but globally, and there's self-interest. But again, I think one of the benefits of the Russia-Ukraine situation is it's woken people up, that you can't, put your head in the sand and hope it all is okay from an energy perspective.
Got it. So before we let you sign off today, what about some advice for professionals that are embarking on a journey for several more years ahead of them? Like, what kind of takeaways can you share with them now that you're not done yet? You're retired from one thing to another. But what are some of the takeaways that you think would our audience would love to hear?
I actually like to talk about this is sort of leadership and mentorship, and as we discussed earlier, I'm mentoring you among others.
Thank you.
I really enjoy that. I probably have 1,000 people that I've worked with over 30 years that used to work for me, with me, and my partners. And I'm really proud of how they've succeeded around the world. Some are still in banking, some are at private equity and hedge funds, others work corporate jobs, and I try to maintain connections with as many as I can. And I kind of, at that point, relationships matter, whether they're personal and professional. And I think they matter over a long period of time. I have former clients, friends who are CEOs and board members that I've known for 30 plus years. And when I first met them, they were one guy in particular I'm thinking about. He was assistant treasurer. I think was his first job. I was a junior banker, and he's now CEO of a major energy company. So I think relationships in your life across all facets of your life matter. Experience, trust, and judgment matter. It's what they say. Reputations are made over a career and can be lost in one situation. So be careful, but you're building that in your career. Be prepared for adversity and volatility. I think that if your life is all full of successes, you're one lucky person, and probably means you won't be ready when that first bad situation hits you. Also, be able to pivot, have flexibility in your careers. Everybody has a view of where their career is going to go, but I didn't think I was going to be an investment banker for three decades when I went off to business school. Have fun. Got to have fun. There's no way you can do a job like this for as long as I did if you're not enjoying it. Be relentless. I used to tell my junior colleagues, you can wait, look at your phone and wait for it to ring for some business to come in. It doesn't happen. Right. I mean, maybe it did later in my career, but it doesn't happen at that point. Being in front of each other in person. I think COVID was a very unique and strange period for all of us, and I think there's still probably too many people that rely on remote work, remote connections. That's not how you build a relationship. That's not how you learn from others. And everybody needs to do what's right for them. But my view is go see people in person and make an impact. Everybody wants to do something that matters to them, and whether it's professionally or could be certainly with your family, it's hugely important. Help your friends when they need you. They will remember you when things are well. Everybody wants to call you, and they're bad. Right. Nobody calls, so they'll remember.
Very good advice. Very, very, very good advice.
Well, I have former clients that advised me, and once they gave up their corporate job, and I know this from doing myself, phone calls trickle down to a small amount. They remember who still calls. And this isn't purely for a business perspective. This is personal as well.
100%. Very valuable advice. Thank you. And for retirees that are,
yes,
what advice do you have for them that just, your experience so far?
Well, I guess my point is you can't really retire after you've done what I've done. You can't just go cold turkey. It doesn't work that way. First of all, you need to have a very supportive partner and spouse, because all of a sudden you're not traveling the world all the time. So make sure you got that worked out. I will tell you one funny story. Probably the funniest story I had after I left the bank was I got a call from a major airline, which I'm a lifetime blankety blank member. And they said, "What did we do to piss you off? And how can we fix it?" And I said, "Well, I'm sorry, it's hard to fix. I just stopped traveling because I'm not working." And I was doing at the end, when I had my global position, I was doing 15 plus international trips a year. And so that's real business, real money. And I miss it from time to time, but not a lot. My main advice, besides making sure you have a good relationship with your spouse and your family and your close friends, is build a portfolio of active opportunities. And they don't all need to be work. You don't need to necessarily be paid, but you need to remain engaged. And I've never been happier. I got a lot going on. And some of it's nonprofit board work, some of it's some investing opportunities, some of it is various clubs I've joined. My golf game is improving slowly. But the other thing is you also need
I'll share a picture of you playing golf with Steve Trubber right here.
Okay. Yeah, Steve retired shortly after me, so we're having a lot of fun. And then also retain flexibility to pivot and pursue new opportunities and new adventures, because when you're not working like a crazy person, these opportunities will come. And when you're working, you didn't even have time to consider them, but now you do. And some really interesting things happen when you are willing to say, sure, I'll do that. And then you meet other interesting people who lead to other interesting people. And that's part of the reason I'm pretty happy is that I've got more initiatives going on that frankly I should be doing, given I'm in theory retired, but it kind of fits what I did when I was working. But these are things I get to pick to do, and most importantly, I get to say no if I don't want to do them. So those are probably my main takeaways. It's a lot of fun. I recommend it to anybody.
That's awesome. And that's why I have a lot of fun interacting with you. And it makes sense because you're happy. You make me feel happy when you're mentoring me. So thank you first and foremost for being my mentor and a good friend. And thank you so much for taking the time today to share your journey to where you have been and where you are today, and sharing that with our audience. We enjoyed it a lot. So have a really nice rest of your day, and I'll talk to you very soon.
Great. No, it's my pleasure. It's a lot of fun to do this. And again, hopefully some of this resonates with people, and I can be helpful to their lives personally and professionally.
Thank you again.
Thank you.
Hey guys, if you liked watching this video, I think you'd also like these interviews that I've done in the past with people like Anthony Scaramucci of Skybridge Capital, David Rubenstein of the Carlyle Group, Carla Harris of Morgan Stanley, Aswa Damodaran of New York University, just to name a few. We appreciate your participation, and we love the likes and subscribe that you do to the channel because it only helps us grow and create more content for you. So hope we can continue to do that. And we love having you back, and see you soon.